If you're day trading and you're making no money, this is the only strategy you need to make money. This strategy has helped me go from an unprofitable to a profitable trader, from passing challenge accounts to getting payouts. This strategy recently just helped one of my students get his very first payout in only 1 month of being in my group. The strategy works. I've been trading it for over 2 years now. If you're in my Discord, you can scroll through the profits channel. You can see that the members are making profits. You can scroll through the weekly report and see week over week we're pretty profitable. The proof is there, and I also trade live Monday through Friday so they can see when I win and when I lose. This strategy is honestly super simple. A lot of people can't believe actually how simple it is, but just because it's simple, don't get it twisted that it's not an effective or profitable strategy. This strategy is super accurate, and a lot of people tell me that it's a crazy accurate strategy after using it. But let's just go right into the breakdown because I know you guys are eager to start learning. The name of the strategy is supply and demand. Now, you probably heard this from other traders. I mean, it's a really popular strategy, but you probably haven't seen any other traders market out like I do. I market out in a very different way, and a lot of people message me and say they've never seen anyone mark supply and demand out like me. So I am going to be showing you guys the exact way I market out, and this is the most accurate way to trade supply and demand in my opinion. So first things first, we know it's called supply and demand. Now, I'm going to be explaining it very simply, and then I'm going to be showing you guys, and you guys are going to realize how simple of a strategy this is. So first things first, supply and demand. For supply levels, you're going to be selling from supply levels, okay? From demand levels, we are going to be buying. So supply, sell, demand, buy. Easy, right? Now, when it comes to the strategy for a level of supply and a level of demand, right? We need a minimum of 2 time frames in confluence, okay? Now, if you don't really know much about trading or looking at multiple time frames, you're probably confused by this right here, which when I start showing you the charts, it's going to be a lot easier and you'll probably understand it there. But you need a minimum of 2 time frames in confluence, right? So supply, you sell, demand, you buy. But if we're looking to sell or buy in the market, we need minimum of 2 time frames in confluence. Now, I'll just make this a little easier. What are time frames? Time frames are levels of supply or demand, okay? So whenever I say, oh, a time frame in confluence, that is a level of supply or level of demand on that specific time frame. And if I need a minimum of 2, there's 2 levels of demand or 2 levels of supply close to each other, okay? So minimum of 2 time frames in confluence. Now, that is the main gist of it, right? That's how simple this strategy is. So we know the name supply and demand. Supply you sell, demand you buy. We need minimum of 2 time frames in confluence to take a trade. And what are time frames? It's levels of supply or levels of demand. So now I'm going to show you real quick what that strategy is. But one last thing, when it comes to supply and demand, in order to find supply and demand, so find supply and demand levels, you are looking for the previous contrary candle, okay? You're looking for the previous contrary candle, and that is how you're going to find your supply and demand levels. So you're probably confused by previous contrary candle, and I am about to explain to you what that is, and then I'm going to be showing you guys in the market how to find that. So for example, in a level of demand, right, which we would be buying from, the previous contrary candle for that situation is going to be a bearish candle, okay? Because it is the last bearish candle before the bullish move. That is the previous contrary candle we're looking for. So for demand, you're looking for the last bearish candle before a bullish move. Let me go ahead and put that. We are looking for the last bearish candle before the bullish move. Let me do this. So for demand, we're looking for the last bearish candle before the bullish move. Now for supply, which equals sells, as we know, you are looking for the last bullish candle before the bearish move. Okay, so it's just complete opposite. For supply, you are looking for the last, my bad, my spelling's all over the place. Supply, you're looking for the last bullish candle before the bearish move. So it's that simple, guys. On a demand, which is when you are buying, you're looking for the last bearish candle before the bullish move. And for supply, which, let me go ahead and do this so it's easy for you guys. You are selling and you are looking for the last bullish candle before the bearish move. Okay, so this might sound a little confusing for right now, but this is where you're going to start seeing it play out, and we're going to make it a lot easier for you guys. Now look at this candle right here. Okay, see how this is the last bullish candle before the bearish move? That is our previous contrary candle, and we are on the M15 time frame. Okay, so remember when I said you need minimum of 2 time frames in confluence? This is what I'm talking about up here. These time frames are the ones I look at on a daily basis. So if you want to go ahead and star these, you can. But right here, we are on the M15 time frame. This is my last bullish candle before the bearish move. So this candle right here would be a supply level, right? That's a candle that we would be looking to sell from. That's that previous contrary candle. So this is going to be a level of supply on the M15 time frame. Now, this is how I mark it out. A lot of people don't mark it out this way, but this is the most accurate way to trade supply and demand. You want to go for supply, which I should have marked this out over there. I totally forgot. But for supply, you're going to be marking the lowest point possible on that candle when it comes to marking your levels out. Okay, so see how I'm all the way at the very bottom? I'm going to go ahead and put a line. This is how I mark my levels of supply and levels of demand out. I don't use a rectangle, a box, none of that. You use a line. Now, remember, time frames. This is key to this strategy. We're on the 15-minute time frame, so I have created the templates right here, and I'm going to mark it with M15. Now, this is one time frame, one level of supply, and we know that this is the level of supply on the 15-minute time frame. If I go to the 5-minute time frame, let's see. Let's scroll over. Where's the previous contrary candle? The previous contrary candle is right here because that is the last bullish candle before the bearish move. So what do? We go and we mark the lowest point possible, and then we tag it with M5. Now this is a level of supply on the 5-minute time frame. Minimum 2 time frames in confluence to take a trade, okay? But the more time frames in confluence, the better. Now we are on the H1 time frame. So see, we're on the 1-hour time frame. What are we looking for? We're looking for the same exact thing on every single time frame. So we go and we find our previous contrary candle, which for supply, we're looking for the last bullish candle before the move down, which is that candle right there. So we're going to go ahead and we're going to mark the lowest point possible, which is right here. And we are going to mark that with an H1, okay? Now you do this for every single time frame because the more time frames in confluence, aka the more levels of supply or more levels of demand close by, like within your stop loss, the better, the higher the probability the setup is, okay? So I'm going to just use these 3 time frames as an example. And let's say I were to set my short position here because remember, you are selling from levels of supply. I would put 40 points because this is Dow, and let's just say it's a 1-to-1, right? You can do 1-to-1, 1-to-2. I'm just going to, actually I'll do a 1-to-2 for this example. So we would have the limit order pending right here. You can see price went all the way up to this level, tapped right into that M15, went down, what it gave us a 1-to-2. This is how you find valid levels of supply. So remember, you need minimum of 2 time frames in confluence, and for supply, you're marking the lowest point possible of the candle. And let me go ahead and put all this up here so you guys can learn and memorize it. So for supply, you're marking the lowest point of the candle. And that's not just the body, that is wick, body, everything. The lowest point possible. For demand, you're marking the highest point of the candle. Okay, supply marking the lowest point of the candle, demand you're marking the highest point of the candle. And then let me put this one last thing and I think we're good. More time frames in confluence equals higher probability setup. Now my spelling might not be the best right now, but I'm just trying to get this done for you guys. Higher probability setup. So more time frames in confluence equals a higher probability setup. And remember, when I say time frames, I'm talking about levels of supply or levels of demand, and you need minimum 2 time frames in confluence. So that is a valid level of supply right there, and look how accurate that would have been. All right, for real, I think this is the last thing I gotta mark out. I keep forgetting stuff, but I'm trying to give you guys as much information as possible, right? Also, with this strategy, you are going to want to enter off limit orders, not market executions, anything like that. You want to do limit orders. That's how I do it. You could do market executions if you wanted to, but limit orders are going to be the most accurate in my opinion. So what you want to do is in the morning, you want to mark out your levels of supply, levels of demand, get your bias, and then have your levels marked out, figure out what you want to do, and set a limit order. So if you're looking for a supply level, right? If you're looking to take sells that day, you're going to want to set a limit sell. And on this example right here, I would be setting it on the M15. So right when it taps into that M15, I am automatically entered in on this trade. And then I have the brackets that automatically put my stop loss and take profit. So there's a valid level of supply for you. Very simple, right? Now here's a good example for a level of demand. Now it has not been hit yet, but this is a good example. So what are we looking for? We're looking for the previous contrary candle. So for a level of demand, the last bearish candle before the move up, which that would be this candle right here. Now remember, for demand, you are marking the highest point possible. So we go get our line, we put it on the highest point. Now right now I'm on the H1 time frame, so I'm going to mark it with H1, and that represents a level of demand on the 1 hour time frame. Let's go here. Now we're on the H4. So what do? We do the same exact thing on every single time frame. We go to the very top of the candle, we mark it with H4. That represents a level of demand on the 4 hour time frame. Let's go to the M15. You can see right in between this H4 and H1, there is a previous contrary candle right there. So we are going to mark the highest point with an M15 line. See how simple it is? And then you do this on every single time frame. And then the more time frames in confluence, aka the more levels of supply or levels of demand close to each other, the higher the probability the setup is. Okay, so this is an M5 right here. You could technically mark this as your M5 as well, because this is the last bearish candle before the move, right? Now I could mark this on the M1 if I go to the M1 and stuff too. I'm not going to do that right now because I'm trying to make this video as simple as I can and not crazy long, because I want you guys to retain the information. But you do the same thing on each and every time frame. So if you know how to do it on the M15, you can find the same thing on the M1. So for this is Dow still. So let's just say 40-point stop loss and 40-point take profit. Or just aim for a 1 to 2. It doesn't even matter what you put it at, right? But you want the most amount of time frames in confluence. So look, we couldn't enter here unless there is an M1, but I'm not going to mark that out right now. We couldn't enter here because there's only one time frame in confluence, and that's at M5. Now, could we enter from this H4? No, we could not, because there's only one time frame in confluence. And now could we enter from down here? Yes, we could, because we have 2 levels of demand and confluence. We have the M15 and we have the M5. Now, you've seen me mark out a level of supply and you've seen me mark out a level of demand. What I'm about to do right now is just explain why you want the minimum 2 time frames in confluence, okay? So let's say we had a setup with a H1, M15, and let's just say we had a M5. It doesn't really matter, right, for this example. But let's say this was a setup we were looking for and we're looking for longs. Now, we're going to have our limit order pending right on this H1. So basically, right when it hits this H1 line, we're automatically entered into the trade. Now, price is moving lower, right? It's moving lower. We already have our limit order set. We're waiting for it to just hit our level so we can automatically be in the trade. Now, the reason why this is so important, having multiple time frames in Confluence is important, is because look what could happen. If we're trending lower, we tap into the H1. Obviously, we want the rejection from that H1. We want to go to take profit, right? Of course. But let's say we don't get a strong rejection off this H1 and we start going lower. Where's price going to go? Price is going to go to the next level of demand, which in this example would be this M15 right here. So price would tap into that M15, and that would hopefully be the level that gives us the bounce and sends us into profit. Now let's say the M15 doesn't and price wants to move down a little bit more. Where is it going to go? The next level of demand. So it would go to this M5, and that would hopefully be the level that sends us into profit. Think of every level of supply or every level of demand as just an opportunity for price to reverse and go your way. Now, notice how that we have 3 opportunities for price to bounce and go our direction and go back into profit. If you only had one level, let's just say we were going to enter off this by itself, price is coming lower, we get into this trade, maybe get a little bit of profit, we come lower. Where's price going to go? Price is most likely going to stop loss because there's no other levels of demand for it to bounce and go to profit. So we're most likely going to stop loss. That is the importance of having multiple time frames, aka multiple levels of supply and levels of demand in Confluence. The market likes to move off levels of supply and levels of demand. So if you can have 4 levels of demand in Confluence, that is 4 opportunities for price to bounce and go back into profit before it hits your stop loss. This is a very simple strategy that has given me a lot of good results. I cannot complain whatsoever. It's given my students good results, and it's a very simple strategy compared to a lot of strategies out there. But if you have any questions about the strategy, make sure you leave a comment and I'll answer them down below. If you want to trade live with me every single day, Monday through Friday, and if you want to access the educational calls on Saturday and the market breakdown calls on Sunday, go ahead and click the link in the description or link in the bio that says Trade Live with me. That's going to take you to my website. When you get on the website, click Trade Live with me, and it'll bring you to the price plans. Choose whatever you want and start trading with me. If you want to apply to my one-on-one mentorship and learn one-on-one from me, have a tailored plan made for you, risk management talks, all that, right? Go ahead, click the link in the description or link in the bio that says apply to my one-on-one mentorship. Once you apply, you're going to watch a short little video. You're going to answer some questions. And if we are the right fit, go ahead, book a call, and we are going to start getting to work immediately.